Hi, this is Adam McAllister from McAllister Myers, and today we are going to talk real estate because many of you may be thinking of using this year's tax return as money towards a down payment on a brand new home. And there's another set of you that may have just bought a home in 2015, and now for the very first time this year, you're going to be filing taxes as a brand new homeowner. We're here with David Riggs, president of Accounting Services of York, and also their chief bean counter here. And we're going to ask David, what should you be looking out for if those are two items on your list as in early 2016? So David, thank you for joining us today. Let's start with that first question. For people who are thinking about buying their first home and they're going, I'm going to get money back this year for my tax return, I can use that towards a down payment. What are some things they should be considering and thinking about as they move ahead?
Some of the things you can look at, rent versus buying a home. In my opinion, it's always better to buy a home than to rent a home. You can claim the mortgage interest and the property taxes on your taxes, which helps lower your tax liability. Interest rates are really, really low right now, 3.75%, I think, is the going rate right about now. I'd rather own than rent just because I'm putting money away and building up equity.
So David, what are the things people should keep in mind if they're looking to maximize their return this year in order to have more money to put down towards that new home?
They can look at buying points when they purchase a home or when they refinance a home. They can also make sure they're getting all their tax deductions. If you have to pay for your mileage, you can track your mileage, and that will help lower your tax liability as well. You're always looking at things to lower your tax liability.
And what are the most common deductions that people miss that people can think about as they're getting ready to file this year's taxes?
A lot of people don't know that they can expense their property taxes and their mortgage interest. They don't think that they're qualified to. And it depends on how much their mortgage interest and property taxes are, but 80% of the people can claim their mortgage interest and property taxes and their charitable donations on Schedule A.
All right. So there's some great advice to use if you're thinking of using this year's return to help buy a brand new home and looking for more money to use for a down payment. Now let's talk about the first-time homeowners from this past year. That 2015 was their first year as a homeowner. They're getting ready to file this year's taxes. It's the first time they've done them. What can they do to make sure they get the most out of their tax return and that they're filing correctly?
I would recommend filing with a tax professional and not trying to do it on their own. There's lots of tax professionals around. There's a lot of advantages to using a tax professional because we go to the seminars and we know the different loopholes and the different tax liabilities that we can help lower.
Right. And for those that are that will be filing for the first time, any changes for 2016 that you know about that they need to make sure they don't miss out on?
The biggest change is the healthcare laws. You can, if you have a premium tax credit, you can help lower your taxes that way.
All right. So again, if you're a first-time homeowner filing this year's taxes and need to maximize your return, or you're thinking of using this year's return to help buy your first home, the folks here at Accounting Services of York are always here to answer those questions for you and get you prepared so 2016 can be the year you get a new home. For David Riggs and the staff here at Accounting Services of York, this has been Adam McAllister from McAllister & Myers, connecting York County through real estate.